The Iraqi Dinar Today latest news dinar is about to embark on a discussion that has electrified our community, marking what feels like a fundamental turning point in a narrative defined for so long by stillness. For those of you who have meticulously charted the course of the Iraqi dinar, be it over recent months or across the vast expanse of years, you know the waiting has demanded a degree of patience that is almost unprecedented in the financial world. The economic landscape surrounding this currency often felt frozen, a study in quietude and unmoving certainty. However, a seismic shift appears to be underway, suggesting that the long-anticipated transition from an era of waiting to a period of genuine, documented action is finally materializing. We are witnessing the first credible indicators that the stagnation which has come to define the dinar's standing may be yielding to a process of authentic, structural change. And this is why the energy in the community has become palpable. This feeling of a genuine shift is not rooted in the usual ephemeral sources that often characterize currency speculation. It is not the product of unsubstantiated rumors, fleeting online chatter, or the overly optimistic prognostications that frequently flood the forums. What has emerged today carries a distinctly different weight, signaling a pivot in the road we've all been scanning the horizon for. Over the course of the next few minutes, we will carefully examine the specifics of this development, dissecting the precise nature of the event that has occurred, and considering why this singular piece of information holds such profound significance for every individual who currently holds dinar. Notes: it is absolutely crucial that you remain with us for this entire broadcast, as the details we are about to share concern what could be one of the most consequential currency movements in the nation's modern economic history. Your commitment and endurance through the quiet, uncertain times may finally be meeting its answer in an official capacity. The source of the current intense discussion is the recent publication of an official announcement, and the authority behind this release is precisely what elevates it above the usual noise. This is a notice that effectively confirms a significant and sustained upward momentum in the value of the Iraqi dinar. It is vital to underscore the distinction here. This is not a random message passed between sources on a private message board, nor is it an anonymous tip from someone claiming secret knowledge within the financial system. This is a legitimate, verifiable document emanating directly from the nation's financial authorities, a publication found within the venerable pages of the official Gazette. The very existence of such a document completely reshapes the landscape of this conversation, moving the narrative from the realm of hopeful theory into the documented reality of an economic shift backed by the central apparatus of the state. On a practical and macroeconomic level, this announcement signifies a decisive break from the past. The dinar is no longer merely static, bogged down in the mire of previous economic difficulties, nor is it subject to the slow, steady depreciation that has been a hallmark of its recent history against major global benchmarks. It is demonstrating movement, and that trajectory is clearly upward. When a sovereign currency registers an official increase in value, it functions as a powerful, unmistakable signal to the broader financial world. It indicates that the intricate internal mechanics of national finance, coupled with crucial macroeconomic policy decisions, are finally aligning in a concerted manner that actively promotes and sustains growth. This confluence of stabilizing factors is the bedrock upon which genuine currency appreciation is built, and it is the reason why this official notice is garnering such intense interest both domestically and internationally. Whether your involvement with the dinar is minimal, perhaps holding a small collection of notes more as a curiosity, or whether you have strategically accumulated substantial stacks over a period of years, this moment may represent the true beginning of a major shift in the reality of your holding experience. It serves as a moment of potential affirmation for all those who maintain their commitment through periods of doubt and a powerful call to attention for those who have remained skeptical on the periphery, watching the developments from a distance. The profound importance of this specific type of movement must be understood in its full context, which extends far beyond simple transactional numbers on a ledger. The value of a national currency is far from an arbitrary figure. It is a tangible reflection of the fundamental trust, the deep-seated confidence, and the overall health of the entire national economy that stands behind it. When the dinar begins its documented upward climb, it transmits a forceful and unequivocal message directly to international banking systems, to large-scale institutional investors, and to the global currency markets. This signal confirms that a positive and significant transformation is actively taking place within Iraq's financial infrastructure. It is a clear indication that the currency is now being viewed with greater seriousness on the global stage, suggesting that the officials overseeing the nation's fiscal policies possess sufficient belief in its future, potential, and intrinsic stability to actively support and facilitate its increased valuation. This profound and material change in economic sentiment is at the absolute core of what makes this recent official announcement so impactful. It is not solely about the possibility of financial gain, though that is a natural consideration for holders. It is fundamentally about participating in a grander reassessment of trust and witnessing the potential for authentic structural reform in an economy that is clearly emerging from a long period of recovery. For those individuals who have chosen the path of the long-haul holder, those who have withstood the scrutiny of skeptics, and the extended periods of silence where tangible evidence was scarce, this news could serve as an incredibly potent form of validation. Reflect for a moment on the months and years where you held steadfast to your convictions, even when numerous voices suggested the endeavor was futile or ill-advised. You acted on your analysis, and you waited patiently for the underlying economic data to catch up to the potential you saw. If this current upward trend is sustained, as the official Gazette publication implies, what was once viewed by many as a highly speculative undertaking could be definitively transforming into a calculated, strategic position that is now starting to show tangible evidence of its worth. The value of your holdings may begin to appreciate, not as a result of internet hype or sheer luck, but because the official, structural financial system itself is organically responding to dramatically improved economic conditions. The potential reward for your unwavering patience, strategic timing, and disciplined holding may finally be drawing within reach, validated by official channels. Furthermore, the impact of this news extends beyond mere financial excitement. For many, it carries a deep personal feeling of vindication. It is the realization that the logical reasoning and analysis applied years ago is now finally being concretely reflected in the official government, published data being released today. Now, we must take a moment to discuss the complex mechanisms likely operating beneath the surface to facilitate and sustain this important shift. When a national currency's official value begins to rise, it immediately initiates a profound chain reaction throughout the entire financial ecosystem, affecting commercial banks, international exchange houses, and all major financial institutions that meticulously track these critical markers. These entities begin a systematic process of preparing for the new reality. This preparation involves a flurry of internal activity, adjusting their posted exchange rates, issuing crucial internal alerts to their trading desks, rigorously preparing their transaction systems, and ensuring their overall operational posture is aligned with the new and elevated currency value. This proactive preparation inevitably leads to a significant increase in market liquidity. Liquidity is a paramount concept here. In simple terms, it means there are more willing and active buyers and sellers within the market, which translates directly into easier access to the currency and facilitates smoother, more efficient exchanges for everyone involved. If the official value increase generates a natural surge in demand for the currency, the official rates will likely adjust further and with greater confidence to accurately reflect these new and sustained market realities, creating a self-reinforcing dynamic. For you, the holder, an increase in market liquidity directly translates into a wider array of options and a much greater degree of financial freedom. It means you may possess the capability to strategically exchange your holdings gradually, if that is your chosen path, or alternatively, you may decide to wait confidently for further potential gains, secure in the knowledge that a robust and active market exists. You might even consider reinvesting the value of your holdings elsewhere, diversifying your assets. Fundamentally, this improved liquidity is about regaining flexibility, asserting control, and having the ability to make financial decisions strictly on your own terms, rather than being constrained by a lack of active market participants or low transactional volume. This fundamental operational shift occurring within the banking sector is an absolutely vital and necessary component of the currency's journey toward complete and enduring stabilization. However, it is crucial to recognize that the implications of this announcement extend far beyond the domestic impact within Iraq or the immediate benefit to local holders. There are considerable global dimensions that must be taken into account. When a national currency begins to exhibit a real, verifiable, and sustained upward movement, the reaction from major international investors, vast financial institutions, and foreign national banks is immediate and intense. They begin a process of thoroughly reevaluating their existing financial exposure to that currency and, perhaps more importantly, considering entirely new investment opportunities tied to the strengthening of the nation's economy. A rising dinar possesses the potential to attract substantial foreign direct investment into capital projects, which, in turn, can further support robust economic growth and stabilization efforts within the country's borders. This influx of attention creates what economists term a positive feedback loop, a chain reaction where initial success pushes the currency even higher over a period of time. As foreign capital steadily flows in, it unlocks new and extensive economic possibilities for Iraq, providing much-needed funding for infrastructure development and the growth of private businesses. This activity inherently opens new doors for those international entities willing to engage and partner with the emerging market. This context clearly demonstrates that the official Gazette announcement is not simply a localized event confined to Iraq's geographical borders. It may well be a significant part of a much broader global transformation in how the nation is fundamentally perceived by the international financial community. The perception of Iraq shifting from a distressed economy to one that is demonstrably in recovery is a pivotal, watershed moment in the entire life cycle of its currency. If you are relatively new to the complexities of currency watching or have only recently begun to follow the unfolding story of the dinar, this moment provides an exceptional real-world crash course in how global financial markets respond to fundamental, verifiable data. Consider a similar scenario in the stock market. When a major company announces stellar earnings or a transformative breakthrough product, the stock price typically moves higher because investor trust and confidence surge. The exact same psychological and mechanical process is now unfolding with the national currency. The core difference is that, instead of dealing with quarterly corporate earnings, you are dealing with profound shifts in national macroeconomic policies, improved internal stability, and a measurable increase in central bank credibility on the global stage. This announcement, therefore, effectively demonstrates that the official economic frameworks within the country are indeed aligning with globally recognized standards of stability and growth. It offers a unique opportunity for all viewers to gain insights into the real-time operations of currency markets. By diligently monitoring the official reports, tracking how market liquidity evolves, analyzing the reactions of the global financial system, and staying alert to official rate changes, you are receiving a tangible, real-world lesson playing out live. This elevates the experience far beyond mere speculation, transforming it into an invaluable, educational journey into the mechanics of global finance, providing insights that retain their value regardless of the final outcome of the currency's trajectory. Now, to ensure proper expectations are set and maintained, we must be absolutely clear. This is not an instant, magical key to overnight, immense wealth. Currency movements, even exceptionally positive ones, inherently require a considerable amount of time to fully materialize and reach a stable equilibrium. What we are witnessing today should be prudently viewed as the beginning of a deliberate, gradual ascent rather than a sudden, chaotic, and vertical spike in value. Stability is always the supreme priority for central banks and responsible financial institutions. They rarely permit abrupt or violently volatile swings in value unless absolutely unavoidable, especially when managing the currencies of recovering or developing economies. A slow, steady, and managed rise is overwhelmingly the preferred and more strategic approach for national financial planners over a sharp, chaotic spike that could destabilize the domestic economy. Therefore, while the upward movement is factually real and deeply meaningful, it is far more probable that it will unfold in a series of measured stages and incremental steps. This slower process is actually a beneficial dynamic, as it suggests that the climb, if sustained, is likely to be enduring and structurally sound, rather than a short-lived, transient bubble destined to burst quickly. A steady, predictable climb allows the national economy sufficient time to adjust without suffering from the shock of sudden financial distortion. That being said, for those who are watching this development closely, this may be a highly prudent and important time to seriously begin formulating a personal, actionable strategy. You need to consciously consider and define how you plan to react when the currency value achieves certain predetermined milestones. Perhaps your best course of action is to simply maintain your current holdings, waiting patiently to observe precisely how far the official upward trajectory is permitted to go before you consider making any move. Alternatively, you might decide to strategically exchange only a small portion of your holdings to immediately secure some initial gains, while leaving the substantial remainder to appreciate further on the wave of potential future growth. You might even consider the crucial concept of diversification, using a segment of your initial gains or holdings to invest in other, non-currency assets to intelligently balance your overall risk profile. The key in all scenarios is to absolutely avoid emotional, panic-driven moves, hasty decisions made in the heat of the moment, or blindly following unsubstantiated online hype without a clear, predefined plan. Instead, you should approach this entire situation with the same cool-headed, strategic focus one would employ in a game of chess, thoughtful, highly strategic, and with clear eyes focused equally on the immense potential opportunity and the inherent, unavoidable risks. Now, let us pause explicitly to address those risk factors, because no legitimate financial story is ever presented as one-sided or guaranteed. A rising currency, while undoubtedly a very positive development, does not automatically guarantee profit for every single holder, and the financial landscape is fundamentally complex and subject to many external variables. There are numerous significant variables constantly at play, including unpredictable geopolitical tensions in the wider region, changes in domestic economic and fiscal policies, fluctuations in internal inflation rates, and the global volatility of commodity prices, all of which retain the capacity to critically affect the trajectory of the dinar. A renewed upward momentum could be abruptly stalled if underlying economic conditions suddenly change, or external shocks could trigger unexpected drops in value. This is precisely why it remains critically important to maintain a grounded and realistic perspective at all times. You must prioritize watching official government statements, meticulously following credible and verified financial reporting, and fully understanding that while the potential for significant gains is clearly real, so is the inherent uncertainty that accompanies any investment or currency market. Holding any currency or asset class always comes with inherent trade-offs and unavoidable exposure to various risks. Being fully aware and prepared for these potential downsides ensures that you will not be blindsided if the official timeline for appreciation extends far beyond current expectations, or if the path toward stabilization becomes unexpectedly turbulent. Another crucial dimension to consider is the psychology of the market, and more importantly, the psychology of yourself as a holder. In times like these, when consequential news breaks through official channels, excitement can build with incredible speed and intensity. People may suddenly develop a powerful fear of missing out, or FOMO, which can quickly take hold. Suddenly, online forums and group chats are saturated with bold, often completely unsubstantiated, predictions of rapid, dramatic gains. That energy can be dangerously contagious, sweeping you up in an emotional wave that overrides logic. History demonstrates unequivocally that decisions made under the powerful influence of market hype are seldom the most rational or the most financially beneficial ones. It is very easy to become consumed by the what-ifs and inadvertently overlook the concrete, factual details of the immediate situation. This is why emotional control, combined with a strict adherence to a pre-established, well-defined strategy, matters more now than it ever has before. You need to take a deliberate breath, step back from the frenzy, and analyze the situation calmly and objectively. Remember and revisit your original, long-term goals for entering this market in the first place. Do not allow temporary, market-wide excitement to push you into reactive moves that you might profoundly regret later on. Smart, successful holders think strategically and maintain a steady, disciplined course. They are not reactive to every single piece of breaking news, but rather thoughtfully responsive to verified, long-term trends and official data. If you make the deliberate choice to remain invested and maintain your holdings, it is unquestionably wise to monitor official exchange rates often, but not to the point of obsession. You should keep a vigilant eye on all official announcements emanating from the nation's financial authorities or from other reputable, credible international institutions, rather than relying on unverified chatter found on social media platforms. Track how international currency markets are fundamentally behaving in relation to the dinar's movements. You might consider subscribing to professional alert services or actively joining well-respected investor communities where all information is rigorously vetted and verified. The prudent course is to actively avoid shady, unverified forums or any bold predictions that promise unrealistic returns without tangible, verifiable evidence. In summary, the most effective approach is to treat your holdings with the utmost respect and seriousness, exactly as you would any other significant long-term investment, rather than treating it like a fleeting lottery ticket or a reckless gamble. You must protect your holdings both physically and legally. Diligently verify every single piece of information you receive, and remain absolutely disciplined in your carefully considered approach. By doing so, you can respond to official developments strategically, rather than being caught off guard or blindsided by sudden, unconfirmed news or fabricated rumors. Discipline, patience, and a reliance on fact are the defining characteristics of successful long-term holding in any volatile market. Looking out further into the long-term future, a rising dinar could potentially signal much more than just a possibility of profit for international holders. It could powerfully reflect a deeply improving, more diversified economic condition within Iraq itself, which constitutes a massive, profoundly positive development for the entire nation. It suggests sustainable growth, long-term stability, an increase in foreign investment flowing into the country, and the establishment of stronger, more reliable international trade relationships. These are robust, long-term indicators that benefit far more than just currency speculators. They benefit the entire, sprawling ecosystem surrounding the currency. The local population, the working professionals, the domestic businesses, the exporters, and the importers could all stand to gain immensely and tangibly from a strengthened, more stable currency. A stronger dinar has the capacity to significantly enhance the purchasing power of the average citizen, support vital international trade by potentially making necessary imports less expensive, and profoundly improve the overall economic confidence within the nation's borders. For the average Iraqi citizen, for the health of the broader economy, and for the sustained confidence of future investors, this official announcement could mark the true commencement of a real, tangible change that improves lives and helps to build enduring national wealth. For those of you currently holding this currency or seriously contemplating future acquisition, this is a moment that demands deep reflection, decisive action planning, and thorough preparation. You should consider consulting with trusted professional contacts or financial advisors, if that resource is available to you, and discussing your plans with other informed, level-headed holders who have demonstrated strategic consistency. Share information widely, but weigh every piece of it carefully against the information released from official government-backed sources. Do not, under any circumstance, allow the fear of missing out to push you into financially risky, ill-conceived moves that could potentially compromise your core financial security. If you are comfortable maintaining your current holdings, ensure your notes are securely stored and that you have a comprehensive, predetermined plan for the eventual exchange process. If your plan involves an exchange or conversion in the near term, you must thoroughly familiarize yourself with the current official rates, the specific fees involved, and the precise process required by your chosen financial institution. And if you are considering entering the market for the first time, do so with utmost caution and a measured approach. Do your comprehensive homework, fully understand the currency's history and volatility, and only commit capital that you are prepared to accept the potential loss of. So, here is the crucial next step for all of us as we collectively process this impactful news. Remain calm, stay highly alert, and maintain complete control over both your emotions and your physical assets. Watch the rates and continue to monitor the news, but do not allow every sensational headline or speculative prediction to dictate your next strategic move. Think exclusively about the long-term horizon. Work diligently to protect your holdings and know your ultimate financial goals inside and out. If you choose to execute a strategy, do it confidently on your own carefully considered terms, with absolute clarity of purpose. For those who have been waiting patiently for a verifiable signal, this might finally be the concrete, official moment you have long hoped for.